as we've been showing you, Palo Alto Networks under some serious pressure in overtime, down a little more than 12.5% at the moment. Joining us now is Bess, former CEO of Palo Alto. He's now CEO at cybersecurity firm Deep Instinct. Lane, to put this into perspective, before this report, Palo Alto had more than doubled in the past 12 months. So, a little 13% here or there isn't going to hurt too much for people who have been in the name for a while. But I wonder what you think this moment represents for cybersecurity, which is one of those have-to-haves, but where the valuations have gotten lofty.
Yes. Well, first of all, I'm in Palo Alto from the beginning, so I still remain bullish. As you've pointed out, the market has priced a lot of the cyber stocks to perfection, and now they're going to have to perform, and the slightest deviation from expectations could impact them. But the truth is, this category continues to increase, and if you look at the sales pipelines in Palo Alto and in my former company, Zscaler, they're burgeoning because of the demand. But I believe the game's going to need to change a little bit. In the past, I think 4 years ago, I was on this show and I recommended that acquisitions for growing the bundle of services that the platform players such as Palo Alto and Zscaler offer needed to expand. Now they need to up the game on AI, and that's going to be the next thing that's going to lift these companies to the next level.
Okay, well, let me go back to that M&A point, though. Has enough of that happened? Because you talk about the platform companies, Palo Alto, Zscaler,
yes.
I throw CrowdStrike in there as well, which has done amazingly well. But I expect all of those stocks, or both of them that aren't Palo Alto, could get some blowback from these results. And so might some smaller names that might be targets.
That's true. But again, the strategy for those platform players you mentioned is to go broad in terms of their coverage in all of the potential points of vulnerability. It's a bundling strategy. So a large part of their growth to this point has come out of providing more and more services to cover more of the vulnerability threat vectors. Now they're going to have to go deeper. And I do think the acquisitions will continue, but I do believe they need to be more acquisitive in the AI area. Not all machine learning, which everybody claims they have, is the same. And that's what's going to be needed to fight the generative AI threats that we're going to be seeing in the next few years. So I would say that they're going to have to continue to acquire, but they're going to have to go deeper into value that's going to prevent threats, not detect and help remediate. They have to get into a prevention stance.
Certainly the stock is moving lower because of the miss on guidance, both current quarter and full year here. But when you look at non-GAAP operating margin, it actually grew 580 basis points year over year to 29% in this last quarter. When you talk about going deeper on AI, what is that going to mean in terms of investing to achieve those capabilities?
Yeah, well, again, it's about developing the same kind of AI and technology which we use at Deep Instinct called deep learning. And deep learning AI is going to allow them to essentially leverage their platforms even greater and get more wallet share and more dollars per customer as they go further into the market. Both of these platform players, or all three of them, Palo Alto, Zscaler, and CrowdStrike, have enormous customer bases that require and need continued attention. So the expansion of the product line, but more importantly, being able to leverage technology such as what we do at Deep Instinct called deep learning, will help them now prevent. The call from the boardroom has been, how do we detect and remediate these threats? But the idea now is going to be, how do we predict and prevent these threats? It's the only way that these companies are going to be of meaningful value to customers as generative AI threats heighten.